Good morning, everyone. I'm Dr. A. Nagalakshmi, Assistant Professor, Department of BCom Finance in Dr. S.N.S. Rajalakshmi College of Arts and Science, Coimbatore. Today, we are going to see a topic in incubation, business development. The topic is venture capital. Learning objective: understand the development of the venture capital market and its current scenario. Describe the structure of a typical venture capital fund and understand how the regulations influence the structure. Explain venture capital fund structure and how the structure influences the kinds of investors and kinds of investment the fund seeks. Understand the role of the general partner of a fund and how those role changes over the life of a fund. Understand the contract structure that exists between investors in a fund, that is limited partners, and the general partner, and how the structure promotes efficient investment and asset management. Understand the important role of reputation in defining relationship among venture capitalists, investors, and portfolio companies. Venture capital and private equity. Venture capital is a category of private equity. Leveraged buyout funds, venture capital funds, mezzanine capital, distressed debt, that is quasi equity. Venture capital is investment capital supplied by a specific type of investor, the venture capital firm. The venture capital firms have a unique structure and focus, normally organized as limited partnership, investment in high risk ventures with potential for high growth or returns. Development of a venture capital market. Legal environment. 1933 and 1934 section acts. Investment Companies Act 1940, Determination of Fair Value, ERISA Act 1974 and 1979, Evolution of Fund Structure, Closed End Mutual Fund, Limited Partnership. Key developments: 1978 reduction of the capital gains tax rate, 1979 reinterpretation of the prudent person standard. Worldwide growth of venture capital. Factors that have restrained venture capital growth in other parts of the world. The fraction of pension fund in investment in equity is highly correlated with venture in capital investment by the country. Outside the US, endowments are not a significant source of venture capital funding. The changing role of venture capital. Recent focus on later stage investment. 2008 seed or startup funding. Importance of institutional investors, pension fund, endowments, and insurance. The impact of venture capital on the economy. For a small industry, venture capital has a large impact. According to the NVCA, venture capital backed companies account for 11% of private sector employment and 21% of GDP. Venture capital backed companies have materially higher rates of job and revenue growth. In technology sector, 70% of employees work for companies that were formerly venture capital backed. The organization of venture capital firms. Advantages of limited partnership structure: the limited liability for investors, finite life, allocation of returns. The general partners is a fund organizer and is responsible for raising investment capital from the limited partnerships. The general partner deploys the capital by investing in portfolio companies which the general partner monitors until harvest. This is the Pakka organizational structure of venture capital investment. General partners generate deal flow, screen opportunities, negotiate deals, monitor and advise, harvest investments. The next is the general partner gives the effort and 1% of the capital as venture capital fund. Then annual management fee 2 to 3 percentage from the fund is given to the general partner. Again, carried interest of 20 to 30 percentage of the gain is given by the venture capital fund to the general partner. Likewise, to the limited partner, the pension plans, life insurance companies, endowments, corporations, individuals. For that, 99% of the investment capital is given to the venture capital fund. From that, capital appreciation of 70 to 80% of the gain is given back to limited partners. In case of portfolio companies, it is value creation. Here, the financial claims is given to the venture capital and the investment capital and efforts is given back to the portfolio companies. Thank you for the patient listening.